Hello there, welcome back to this course. This is the second video in my accounting basics course. If you have come across this video, then please go back and watch the video previously. In this video, I want to go through some basic financial terms used in the field of finance and accounting. As the title for this course suggests, this is an accounting basics course, so there won't be a long list of terms to go through, and I won't cover all terms used in accounting, but just the more common terms. So let's go through this list, and after this video I'll go through financial statements with you. Sales and revenue, there's a difference between the two. Let's look at my notes here. So a sale is cash received through providing a service or selling a product. So if you have an eBay business and you're selling a product, say, the cash received for that product sold is the sale. Or if you provide a service, say you are a bookkeeper or accountant like me, if you do someone's accounts for them, perhaps file a tax return, you would charge a fee for that, and that is the sale. Sometimes sales are referred to as turnover, the turnover of the business, or the amounts of sales in monetary value for the business. And then the collection of cash received from various sources usually refers to the revenue. So there's a difference between sales and revenue. Your sales is the cash received through providing a service or selling a product, and then your revenue is the collection of cash received to the business. So things like sales and other sources of income. Perhaps you rent out part of your business premises to someone else and receive income from that on a monthly basis, and perhaps there are other income streams to the business. Those other income streams, along with sales, create the revenue of the business. So your sales refers to the cash received through providing a service or selling a product. Your revenue is the collection of the income of the business. For most businesses, that may just be sales. The revenue may just consist of sales. For other businesses, the revenue will be 90% sales and 10% other revenue, for example. If you have any questions about sales and revenue, please just leave the question in the comment boxes below. Expenses, I think most understand expenses and what business expenses are. All of the notes I've made for these terms are my own notes using the knowledge from my own head, so I do apologize if the definitions for each of these terms what you would find in a textbook. I'm very much a practical thinker, and I want to try and explain these things very simply. So expenses, cash out of the business for the day-to-day running of the business. So if you have a business, if you think of the cash that's going out of the business from day to day, perhaps rent, perhaps electricity and power, perhaps water, perhaps fuel for your car, perhaps a payment for a van that you are leasing. All of these things are expenses. Wages, for example, paying people's wages. These things are expenses to the business. They pull cash out of the business. They are usually referred to as purchases, or can be referred to as purchases, but assets can also be referred to as a purchase, and we'll come to assets in a minute. And then note number 3, they are usually recorded through purchase invoices or receipts. So when you incur an expense, you generally have an invoice for that expense or have a receipt. Another way to look at expenses is money out of the business for consumables, things that you will use that you can't necessarily sell on, because things like stock that you are going to sell for a profit are not an expense to the business. They are actually an asset. They have some sort of monetary value that you can sell on. Expenses are usually things that are consumable and are not assets. So assets, excuse my spelling error, something of value that is used to create wealth for a business. So an asset is something of value that is used to create wealth for a business. If you think of a factory, the machinery in the factory would be an asset. The machinery has value and is used to create wealth for a business. Another characteristic of an asset is something that can be resold. You wouldn't purchase electricity and resell that, but electricity is used in the day-to-day running of the business, whereas a van or machinery or property can be resold, and sometimes for a profit. The third characteristic for an asset is that it is owned by the business. So you may have a company car that is on lease. That would actually be an expense. But a company car that is owned by the business would be an asset. And there can be some confusion between assets and expenses. But if you just remember these three main characteristics of assets, that they create wealth for a business, that they can be resold, and that they are owned by the business. Opposite to assets are liabilities, which is cash owed by the business, and it's usually debt related. So liabilities usually include things like money owed to suppliers and debt payments. So if you have a supplier that provides stationery for your business, the stationery would be an expense. And if the stationery was purchased on credit and that you owe that supplier the money for that stationery at some point in the future, then that money owed would be a liability to the business. The business owes money to someone. It's cash owed by the business. Something that I didn't note under asset, an asset can be cash that is owed to the business, such as customers. So let's add this in. Okay, so number 4, a common asset for a lot of business is credit customers. So customers that are on credit terms and that owe money to the business, that's an asset. So common liabilities are credit suppliers and debt payments. Hopefully this makes sense. If you have any questions about sales and revenue, expenses, assets, or liabilities, please just leave the questions in the comment boxes below. You may find that others have asked the same question as you have, and there is an answer below. Thank you for watching. Please use the link to watch the next video.